talk about the U.S. equities and the S&P 500 index that ended flat on Monday after recent sharp losses in the gone few trading sessions. However, worries about the EU debt crisis and a weaker U.S. data kept investors wary of equities. The flat session follows Friday's slide of more than 2% that erased the Dow's gains for the year. On Monday, U.S. data showed orders for manufactured goods dropped by 0.6% in the month of April, its first decline in about 4 months, or rather third, I stand corrected at that. On closing bell, the Dow slipped about 11 points, the S&P 500 index inched up marginally, and the Nasdaq as well rose about 13 points.
Look at Asian markets. What do we have there? Asian markets are looking slightly stable. The dollar index has retreated. Crude prices and copper prices, they have stabilized. So there is a relief rally. It's too early to make some kind of an assumption that global risk-on trade has started and global risk-off trade has reversed. I guess globally we are in for a day of respite, nothing more, nothing less. Okay, Chinese PMI data, what is there? HSBC is indicating that it has gone to 54.7. So China is slowing down. First it was Europe, then within Europe it was Greece. Problem has moved from Greece to Spain, and now Asia seems to be threatening that it will slow down, and if Asia slows down, I'm sure it will have impact on global consumer demand. Doug Robert joins us, Chief Investment Strategist with Channel Capital Research, joins us live from New Jersey. Doug, if you look at price action in U.S. equities last night, things are looking extremely volatile and extremely choppy.
Yeah, I'd say the big thing that right now people are banking on is they're definitely seeing a slowdown. You saw it really with what's going on in Europe and its effect on here in the United States, but particularly with the unemployment numbers and the ISM and PMI numbers last week indicated that a slowdown is in progress. I think what people are banking on right now is that there'll be some type of a central bank response by the Federal Reserve, possibly either a discussion of QE3 beginning or an actual QE3 program of some type with a schedule for implementation. That's really why you're seeing the market stabilization a bit, as they figure that during an election year, the Fed will basically stimulate, if necessary, to avoid problems.
Doug, what's the expectation from the G7 meet? Because Asian markets are slightly hopeful of what may come about from there and rebounding this morning.
I think in terms of a long-term solution, you're not going to really see anything. The most we could probably hope for is some type of a kick-the-can-time type the road scenario that we saw last year and the year before. But really, unless Germany changes its fundamental position, they're really in the driver's seat and have veto power about any plans the G8 comes up with. So I think it's really probably more discussion, possibly some positive language or positive future indications coming out of it, but nothing really substantial.